check your company's health using just the balance sheet. Let me ask you something. Close your eyes for a sec and imagine tomorrow morning your business makes zero sales. No orders, no invoices, no cash coming in. How long would your business survive? A week? A month? A quarter? Most of the business owners do not know an answer. Not because they are careless, not because they are bad at business, but just because no one ever taught them how to read your business health. And here's the good news. You don't need an MBA. You don't need to fall in love with finance. You don't need complicated formulas. You just need to read one statement, the balance sheet. In today's episode, I will show you how to read a balance sheet like a doctor reads a health report. Simple, practical, and no jargons. Think of a balance sheet like a photograph, not a movie, not a story over years, just a clear snapshot today. And it just answers one question: what does the business own and who paid for it? Everything on the balance sheet falls under two buckets: things the business owns and whether it came from you or someone else. Once this clicks, finance stops being scary and start being useful. Liquidity. Can my business breathe? Let's start with something which is most important. Liquidity. In simple human language, can your business breathe? You'll have to just look at cash, bank balance, and money customers owe you. Now look at suppliers' payments, salaries, rents, EMIs, and short-term bills. Here's a real question every business owner must ask. If no money comes in for next 3 months, can my business survive? If the answer makes you uncomfortable, your business isn't dead yet, but it's gasping for air. And here's a big question most people learn too late. Businesses do not fail because it's unprofitable. They fail because it runs out of cash. Remember, liquidity is oxygen. Debt versus equity. Who owns the stress? Now let's talk about stress. Not emotional stress, but financial stress. And the balance sheet tells you exactly who owns it. Ask yourself, how much money in this business belongs to me? And how much money belongs to banks, lenders, investors? Debt is not bad, but blind debt is dangerous. And the balance sheet tells you exactly who owns it. What is healthy debt? Debt used for buying machinery, debt used for growing revenues, debt used for expansion. Then what is dangerous debt? Debt used to pay your salaries, cover your losses for survival month to month. Here's the litmus test. If my profits drop next year, can I still repay this debt peacefully? If the answer is no, the balance sheet is quietly warning you. Even if the sales look great. Asset quality. Is my money working? Asset. The word sounds positive. But here's the truth. Not all assets are useful. Look at inventory collecting dust. Machines that barely run. And customers who haven't paid in months. On paper, these are all assets. In real life, these are money that fell asleep. And healthy business turns the asset into cash, keeps the money moving. Remember this line. An asset that do not generate cash is a liability. Wearing mask. Retained earnings. Is this business truly winning? Now we have reached the most honest section of the balance sheet. Retained earnings. This shows one thing. How much money has your business kept over time? You can have growing sales, busy operations, and bigger teams. But if your retained earnings are weak or a negative, then your profits are leaking. Growth is not compounding. This number tells you whether your business is truly building wealth or just staying in business. Here's the final health check summary. When you look at your balance sheet, ask 4 business questions. 1. Can my business breathe? 2. Debt. Is my borrowing helping me or hurting? 3. Assets. Is money working or asleep? 4. Retained earnings. Am I actually winning in long term? An accountant can prepare your balance sheet, but only you, the owner, can read its warning signs and its opportunities. Once you learn this, you stop guessing and start leading with clarity. In episode 4 of Financial Awareness at Modak Talk, I'll show you how smart owners use leverage and return on equity to multiply the growth without multiplying stress.